A tense stillness now hangs over XRP's price charts near the $3 mark. After a blistering rally earlier in the summer to multi-year highs around $3.66, the token has been consolidating and not in a healthy way. On the daily time frame, a classic descending triangle took shape. A flat support near $2.70 and a downward sloping resistance line running from the $3.60 zone. In mid-September, XRP briefly pierced above that $3 zone, seemingly breaking out of the triangle, but the move instantly failed to gather steam. A textbook bullish fakeout. The CoinDesk data showed XRP jumping toward $3.035 on the night of September 9th to 10th, only to be met by a surge of selling that knocked it back to $2.94 by the session's end. In other words, bulls could not hold above $3, and the market promptly rejected the breakout. Technically, this is ominous. The failed breakout left a residual overhead barrier stacked up around $3.05-$3.15. Chartists now point to a sharp breakdown from a bear flag, a tight consolidation that follows a drop just as worrying. The combined descending triangle and flag structure implies more downside ahead. Target zones near $2.40 or even as low as $2.06 if the breakdown accelerates. Indeed, analysts note that a clear bear flag has emerged on the charts. Santiment's on-chain analysts even flagged this. The flag's break to the downside suggests further falls toward $2.40. In practice, once support in this $2.95-$3 area cracks, the next meaningful floors are well below the 50-day simple moving average, hovers around $3 and has so far capped rallies. While the 200-day SMA sits near $2.50, the triangle's measured move about a 31% drop would bring XRP back toward roughly $2.06. Amidst these shifts, whale investors have been unloading massive amounts of XRP. Recent sentiment data shows that wallets holding XRP plunged their combined balance by roughly 160 million tokens over 2 weeks, driving their holdings down from about 6.95 billion to 6.79 billion XRP. In other words, large holders are taking profits on these rallies. Santiment explicitly notes that this sharp offloading has pushed their supply to a 6-week low, underscoring distribution pressure on XRP. Equivalently, on-chain charts show the same figures. Whales sold over 160 meters XRP, roughly $476 million worth in recent weeks, a clear sign that some of the biggest investors expect lower prices or are locking in gains. Meanwhile, exchanges are seeing a flush of new XRP coming in. Glassnode data confirmed that about 665 million XRP have flowed back onto centralized exchanges since late August, lifting total exchange reserves to roughly 3.94 billion XRP. These added balances represent liquidity poised for selling. Historically, such rapid inflows to exchanges, especially after a bull run, have often preceded tops or corrections. With nearly 4 billion XRP now parked on exchanges, available supply has swelled, and the market knows it. In sum, between whales dumping and exchange pools swelling, the supply overhang is building. On-chain usage metrics add to the warning signs. XRP's network activity has cooled dramatically. Daily active addresses (DAOT) on the ledger have plummeted from a July peak of about 50,500 down to roughly 21,000 today. New addresses per day have likewise fallen from around 11,000 to 4,300. CryptoQuant's on-chain trackers highlight this slump in engagement. In practical terms, fewer traders are transacting with XRP, and fewer new participants are jumping in. Historically, such a sustained drop in network activity often means reduced liquidity and waning demand, conditions in which prices can easily slide. Thus, besides price patterns and volume, user metrics are flashing red. All the technical indicators are currently neutral to bearish. The RSI sits around the mid-50s, about 53, showing no clear bullish momentum, while a stochastic oscillator is flirting with overbought levels, and a DX is around 17, indicating a weak overall trend. In short, the oscillators aren't signaling an imminent upside blast. If anything, they hint at indecision or the risk of further weakness. Even the MACD remains only marginally positive and is flattening out. On these charts, XRP looks ready for a pause or pullback, rather than a sustained rally. Classic signs of being stuck in a distribution phase. On the candlestick charts themselves, the $3 level has become a gravitational ceiling. As one analysis observed, each time XRP tried to climb above $3.023.05 recently, it was smacked back down by heavy sell orders. Volume spikes occurred on the way down. For instance, on September 10th, a surge in trading wiped out the earlier gains and dumped the price to $2.94. Key short-term support around $2.94, $2.95 has so far held. But if that cracks, the chart path looks ominous. The immediate pit stop support at $2.95 gives way to a range around $2.85. And below that to the psychological $2.70 zone, which is also the flat bottom of the triangle. A failure of $2.70 could trigger a slide deeper toward the 200-day SMA near $2.50, with a worst-case return toward the mid-$2.00 south. With XRP essentially carving out a tight range under $3, traders are eyeing a big breakout move in either direction. The chart looks like it's coiled in a symmetrical triangle flag pattern, meaning volatility could erupt once the apex is reached. The bearish scenario is playing out. The flag is broken down. If instead bulls do somehow reclaim $3.20, $3.30 convincingly, there would be a case for an upside reversal. But for now, the technical outlook is cautious. The recent pennant flag breakdown implies a downward continuation. Measured moves project targets as low as $2.40 or even $2.06 so far. Market participants are hedging their bets. Spot prices reflect this tug-of-war after the fake breakout. XRP has mostly hugged just under $3, churning with very low volatility. The 50-day SMA around $3, and now the 21-day SMA near $3.10 act as resistance walls. On the upside, $3.20, $3.30 is the next real battleground. Above that, bulls could argue a bigger breakout is underway. But any rally is meeting a wall of selling. Whales will likely defend those ceilings. And the swollen exchange balances mean sellers are in position. In essence, XRP is technically stuck between $2.95 and $3.05. Trapped in a narrowing band that has historically signaled more turbulence ahead. What could change the game for the bulls? For one, a decisive close back above the downtrend line and above key moving averages could flip the structure. Analysts have noted that reclaiming the mid $3, south even $3.07, $3.13, would open the door to prior swing highs near $3.40 and $3.66. Sustained demand could drive up a floor. But momentum indicators must improve. A rising RSI out of neutral, a bullish MACD crossover, and stabilizing a DX if trend strength returns would all be needed. Crucially, XRP would have to hold above its 50-day SMA and push back toward the 21 and 100 period EMAs to shift sentiment. In lay terms, bulls need to mount a counterattack soon or risk another leg down. On-chain and macro catalysts could also tip the scales. In the near term, attention is on the Federal Reserve's September meeting. A widely anticipated 25 BPs rate cut on September 17th is priced in. If it comes as expected or bigger, crypto markets often rally on the liquidity boost. That event looms as a possible wind in the bull's sails. More speculatively, the outcome of the SEC review of multiple spot XRP ETF applications in October is another wildcard. Approval of even one ETF would likely spur institutional inflows and lift XRP on-chain. A solid uptick in new addresses or active usage contrary to current trends could signal returning interest. But all available data currently show contraction. In short, the downside risks are real and immediate. The chart patterns failed, triangle breakout, and flag breakdown. And the heavy selling by whales and on exchanges argue for a continuation lower, potentially into the mid-$2s. The declining user activity adds to that risk. Fewer active wallets DAOs and fewer new entrants mean less natural demand to absorb sell pressure. If macro news disappoints, say a delayed Fed cut or a no decision on ETFs, the selling could intensify. The fact that exchange balances are at 12-month highs suggests any small pullback could see additional dumping. In the worst case, one could imagine a cascade into the low $2.00 south, meeting the longer-term triangle target around $2.06. Yet the story is not all bearish. Some bullish scenarios remain plausible. The same catalysts, Fed cuts and ETF approvals that could be headwinds if they stall, could turn into powerful tailwinds if they surprise positively. A confirmed rate cut and clear guidance to easing might send a wave of risk-on momentum into crypto, as traders often rush to buy after Fed easing. Likewise, a surprise green light for an XRP ETF could trigger immediate demand from institutions. In that case, XRP could buck the current narrative. If buyers return, the worst-case price zone around $2.40, $2.65 might instead become a buying opportunity that drives a sharp rebound. A successful break above $3.20, $3.30 would then flip the technical picture. That would mean the descending triangle and flag have failed, and new targets could be set at $3.40, $3.66 and beyond, reclaiming and holding above the 200-day SMA $2.50 and building above the 50-day tilde. $3.00 would be key milestones that could stabilize price. Finally, history reminds us that long consolidations often precede big moves. While current on-chain metrics look weak, the broader market context is still rich. Bitcoin and other majors are near their highs, and alternative coins, albeit XRP, has its unique legal status, are drawing capital. If XRP can even flirt with digestible catalysts, for example, a hint of SEC flexibility or accelerating adoption news from Ripple's enterprise pilots, traders might swing to the bull camp. In that scenario, even the heavily shorted neckline at $3 could be decisively reclaimed, feeding into short squeezes. Also, if whales pause their selling and some institutional smart money begins reaccumulating, perhaps off low $3 dips, the supply pressure narrative could quickly flip in an expert's voice. All this reads like a thriller scene. The charts are the stage. Price is trapped in a tight pattern, and big players' whales are unloading enormous bags. Yet offstage in the macro background, the Fed and SEC hold the power to change the ending. For now, the tone is cautious. Every indicator from simple moving averages to on-chain flows points to a tenuous balance, with a tilt toward the bears. It would take a clear catalyst to flip the odds the other way. Until then, XRP's fate will be decided bar by bar, as traders watch for the next breakout or breakdown below $3.